Welcome to CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange. August is Black Business Month, and we're highlighting some black firms, talking about their companies, their industry, and just their outlook in general. Right now, I'm joined by Miss Tina Byles Williams, the CEO, CIO, and co-founder of Xponance, a multi-strategy investment firm that includes equity, fixed income, and alternative investment strategies. Assets under management is at $22 billion. Tina, thank you for joining us.
My pleasure. I look forward to the conversation.
I'm looking forward to it myself. Why don't we start talking a little bit about you? Tell us about your journey and how you got into the finance space.
Sure. So I'm Jamaican. I came here to college and studied at NYU. Did a stint on Wall Street at Prudential, then went to Harvard, recruited from Harvard by one of the deans there who became finance director of Philadelphia. And she recruited me to first manage assets for the city's gasworks, Philadelphia Gasworks. Then I went on to become CIO of the city's pension fund in 1990. After that, I returned to the private sector, and in 1996 established what was then FIS Group, now Xponance. Grew organically, as well as did a couple of acquisitions, and today we have a multi-asset platform, as you said, which is really geared towards, our mission is to transform access to alpha through a multi-solutions platform.
Well, as today you're looking at today's market, when we look at the equity market, it's trading very close to highs. We're seeing also a lot of other alternative investment opportunities, whether it's the private markets, cryptocurrency. So a lot of money seems to be going in different places. What's your overall view of the current market?
So, you know, the question for investors, and I'm really speaking at for asset allocators who have to make long-term decisions, is whether we're undergoing a regime change in the world's geopolitical and macroeconomic landscape, or whether the volatility that we've seen this year, it merely reflects peripatetic policy communication. We believe that the answer is that it's the former, in that in a multipolar world in which the U.S. is no longer the singular global hegemon, it just can't continue to operate as the world's consumer of last resort and thus run up these huge current account deficits, as well as essentially the sovereign wealth fund for the rest of the world. And to correct these imbalances, and you're already seeing these occur, Europe needs to invest more in its domestic industrial capacity. China needs to better balance its overinvestment in production relative to domestic consumption. And the U.S. will need to tighten its fiscal belt to reduce consumption. And that has significant long-term investment implications.
All right, so as long-term investment implications, more in the short term right now, what parts of the equity market are you seeing as attractive?
I see that, you know, one of the, and, you know, obviously we're beginning to embark on earnings season, is whether earnings from the AI hyperscalers will meet the, you know, expectations that the market has assigned to them. I count me as a bit skeptical, not so much as this earnings season, but, you know, over the next 1 to 2 years, in that I think the market, it remains to be seen whether AI, whose benefits are substantial but diffuse in terms of productivity and productization, will inure to the earnings expectations assigned to these individual companies. The other sort of short-term influence, obviously, is what the Fed will do. I am in the camp that I don't think the Fed will ease in this month, and will probably do so in September of this year.
So with that point of view right now, when you're looking at the U.S. markets versus international markets, is the U.S. more attractive than international? If we're talking international is more attractive, is there a certain region or country where you're seeing opportunity?
I think Europe is one. No, again, it probably, we need some space for Europe to come off the boil, but for the balance of the year, I think Europe is interesting for a number of different reasons. One, it has a fiscal space to expand. It also is reducing intracontinental barriers to business, creating a more favorable political and regulatory environment for M&A, and also putting in place reforms to private credit and securitization markets. What that means is we're very bullish on European private equity or any sort of domestically focused sectors such as telecommunications.
Yeah, let's talk a bit more about that. Right now, you're seeing the private markets as being more attractive than the public markets. Can you kind of expand on that? Where in the private markets are you seeing opportunities? And are you talking about just accredited investors, or do you see opportunities for the regular retail investor as well?
I think mostly this is an institutional play. I mean, private market generally is an institutional play, although, as you know, private market GPs are making inroads into sort of retail-focused platforms. But in general, this is an institutional opportunity. And it will happen over time. As I said, what I think is creating the tailwind is reduced regulatory barriers, and that never happens quickly. But I do think, again, from the perspective of an institutional investor making long-term allocation decisions, there are considerable tailwinds to, again, European small cap as well as European private markets.
One of the big questions, you were just kind of talking about it, is are alternative investments right for 401ks for regular Americans? We know for high net worth individuals, alternative investments have long been a part of the portfolio, but do you have a take when it comes to 401k investments for regular investors? What's your view?
Look, if it's done in the context of, you have these target risk or target date funds where there is a glide path depending on, the participant's age. So for younger participants, where they can obviously, they can take the volatility or the illiquidity that comes from private markets, I think it's fine with appropriate guardrails to include private markets in sort of long-dated target date or target risk portfolios, which is how most retail investors through their 401k access institutional markets. But I think the appropriate guardrails need to be in place.
You've had a obviously wonderful career starting your own firm, working on Wall Street, working for a big municipality. I'm sure there's a lot of people out there who would like to follow in your footsteps, especially in the Black community. What advice would you give them about pursuing their dreams in finance?
Fortune favors the bold, but also the prepared. And so, learn your craft. The first threshold for people taking you seriously is that obviously you build domain expertise in the area, and that happens over years. The other thing, particularly for Black professionals and women, I'll convey what my mentor once said to me: never let the doubters live rent-free in your head.
That's really great. That's really great advice. Absolutely. Just more broadly, when we're talking about investing, do you have a particular philosophy? Obviously, you manage other people's money, and I'm sure you have some principles that you use to do so. Are there principles just more broadly when it comes to investing that you follow?
Yeah. So, and particularly in today's environment, I believe that the geopolitical and political environment matters to, investment opportunities. But it's important that you find a way to apply the lessons from the environment in a disciplined way. And what we do is we look at something called constraints versus preferences. So if there is a particular geopolitical event, we don't get caught up in the sort of sensation of headlines. We look at, all right, this actor may want to do this, but what are this political actor or country's actual constraints to actually doing it? And so we invest to comport with constraints as opposed to rhetoric or preferences by a political actor. And then, you keep your discipline, whatever that is. In our case, we tend to be more value oriented. Obviously, some investors are more growth oriented. Whatever that discipline is, to stick with it, but to understand the balance between sort of the rules of fundamentals versus how the changes in the environment may change how the market responds to those rules. And that's where I think a lot of investors, quite frankly, miss the mark.
All right. Tina Byles Williams, co-founder, CEO, and CIO of Xponance. Thank you so much for your time and sharing not only your insight into your career, but your insight into the markets. And thank all of you for watching CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange.